Your balance sheet says that you have £10,000 sitting in your Stripe clearing account. You open Stripe, the balance is zero. And here's the part that most founders miss. That £10,000 isn't money. It's an unanswered question, so let's break it apart. I'm Karl from KKG Accountancy. We look after the numbers for e-commerce founders. Here's a question that should bother you more than it does. Your balance sheet says that you have £10,000 sitting in your Stripe clearing account. You open Stripe, the balance is zero. You ask a bookkeeper, and they tell you that it'll wash out eventually. It probably won't, and here's the part that most founders miss. That £10,000 isn't money. It's an unanswered question. It might be a timing difference, it might be a fee nobody recorded, it might be 3 years of small errors that have slowly bent your profit, and not always in the direction that you'd guess. Until someone breaks it apart, you genuinely don't know. So let's break it apart. Let's start with how the clearing account works. When you sell through Shopify or Amazon, or your own site, the money that lands in your bank from Stripe or PayPal is never the money your customer paid. It arrives net of processing fees, refunds, chargebacks, any rolling reserves, and on overseas sales, FX conversion. So a tool like A2X or Link My Books does something clever. It posts the full gross sale, then posts the fees and refunds separately, and parks the difference in the clearing account. When the real payout hits your bank, it clears that batch back to nil. Done properly, you get 4 things. Your turnover is recorded gross, so your top line is correct. Your fees show up as an expense you can actually see and measure as a percentage of revenue. Refunds and chargebacks are tracked, and the clearing account nets to nil on every payout that's fully settled. So where does it go wrong? Almost always in the same 3 places. The edge cases a generalist bookkeeper hasn't seen before. First, month-end splits. E-commerce payouts love to straddle the end of a month. A2X correctly splits one payout into 2 journals, so the revenue lands in the right month. 600 in September, 400 in October, but the bank shows one deposit of 1,000. Match it to just one journal, and you've left £400 stranded. Second, hidden FX and bank spreads. Sell internationally, and the cash that actually arrives is usually a little less than the platform promised, eaten by exchange margins and routing fees. The platform expected 820, but only about 812 lands. That's nearly £8 of spread that never gets posted. Third, third-party gateways. PayPal, Klarna or ClearPay all run their own payout schedules and take their own cut before the cash reaches you. One journal, 3 separate deposits across 3 days. £14 of gateway fees that never quite line up. The one unrecognised balance that does belong in the clearing account is a rolling reserve. That's real money your processor holds back against future chargebacks. It's yours, it's just withheld, and it belongs on the balance sheet until it's released. Let me show you exactly how the gap appears on a single sale. A customer pays £100. A2X posts a journal, £100 gross minus £12.19 fees, minus a £2.10 refund. That's £85 net. That's what your books say should arrive, but the bank payout after FX and the bank's own spread comes in at £82.40. 2 different numbers. The journal says £85 going in and the bank clears £82.40. The clearing account is left holding a £2.60 difference. Now £2.60, who cares, right? Here's why you should. Until someone names it, that £2.60 could be a timing item or an FX variance or a missing entry. On its own, it's trivial, but multiply it across the hundreds of payouts month after month with nobody ever clearing it, and that's exactly how a £10,000 phantom balance builds up in your accounts. So how do you know if this is you without becoming an accountant? 4 quick checks. First, your clearing account balance should grow with sales, never faster. Compare it against monthly sales across the last year. If it's outpacing them, transactions are getting stuck that should have cleared. 2. Is your clearing account balance bigger than a week or 2 of payouts plus any reserve? If it's several months of takings, that's not timing. 3. Has the same round number sat there for months? A real timing balance changes every cycle. A frozen 10 grand is a balancing figure nobody's explained. 4. And this is the one that tells you everything. Ask whoever does your accounts to show you a list of exactly what makes up that clearing account balance today. A good accountant gives you a sure evidence answer. It washes out eventually is not an answer. It's the symptom. Fixing it forward is mostly discipline. Reconcile by payout, not by month. Pull the actual settlement reports, not the dashboard summary. Each completed payout should clear its own batch in the clearing account to nil. Check the gross and net at the platform level. Total sales less total fees less total refunds should reconcile back to 0. And treat anything left over as a finding to investigate, not noise to ignore. And if you recognize your own account while watching this, don't panic. You can fix it retrospectively without unpicking every transaction. The one thing to know, the correction goes both ways. You might have overpaid tax and have relief to claim, or there might be an underpayment to put right and disclose. VAT can be caught up in it too, which is exactly why you scope it deliberately rather than discover it in a panic at year end. So that's the phantom cash. It's not a quirk that you tidy up at year end. It's the visible end of a bookkeeping pattern that can touch your profit, your corporation tax, and your VAT all at once. The good news is it's fixable, and the fix is mostly the right reports and a bit of discipline. If your clearing accounts haven't been reconciled line by line in a recent memory, that's exactly the kind of thing that we look at. Book a call, the link's in the description below.